This week's crypto news is packed with high-impact stories that could shape the future of the market. Bitcoin and Ethereum saw price swings, key economic data influenced trading decisions, and India is making bold moves in the BRICS bloc with crypto. We've also got news about Vitalik Buterin's ETH transfers, Bitcoin whales piling up their holdings, and major institutional shakeups in the Bitcoin ETF space. Samsung's entering the crypto game, Russia's leveraging crypto to bypass sanctions, and Venezuela is planning its return to digital assets. Stick around to hear all about the latest developments and what they mean for you as a crypto investor. Welcome back to Chain Mind, where we break down the week's biggest crypto headlines and explain how they might impact your investments. Let's dive right into the major stories of the week. Bitcoin started the week with some volatility, opening at $58,000 and showing a brief upward push mid-week, reaching as high as $59,800. However, the rally didn't last, and we saw a steady decline as Bitcoin fell back to the $52,500 range by the end of the week. This drop reflects the uncertainty that has been dominating the market lately, especially with the economic data released this week. Ethereum saw a similar trajectory starting at $2,511, reaching a peak of $2,564 and then dropping sharply to close at around $2,150. Both assets have been under bearish pressure, suggesting that the market is still trying to find stability. Several important pieces of economic data played a key role in shaping the crypto market this week. On September 3rd, the ISM manufacturing PMI came in lower than expected at 47.2, below the forecast of 47.5. While it's an improvement over the previous month's 46.8, it still signals contraction in the manufacturing sector, indicating that inflation and higher prices are affecting production. This report weighed on risk assets like crypto as investors remain cautious about the potential for an economic downturn. On September 4th, the JOLTS job openings report revealed that job openings fell to 7.67 million, missing the forecast of 8.09 million. This lower than expected figure further fueled recession concerns, and crypto markets reacted with increased volatility. The next day, ADP non-farm payrolls data came in at 99,000, well below the expected 144,000 and down from the previous month's 111,000. Jobless claims on the same day dropped slightly to 227,000, better than the 231,000 forecast, but still indicative of a softening labor market. Adding to the economic narrative was the ISM Services PMI on September 5th, which came in slightly higher than forecast at 51.5 compared to the 51.3 estimate. While this shows some resilience in the services sector, it wasn't enough to calm market nerves. The week wrapped up with non-farm payrolls coming in at 142,000 on September 6th, again below the forecast of 164,000, though better than the prior month's 89,000. The unemployment rate held steady at 4.2%, matching expectations. This series of weaker than expected economic reports has impacted the crypto market by reinforcing concerns of a potential economic slowdown. As a result, crypto prices struggled to hold gains and investors grew wary of taking on additional risk. Amidst this macroeconomic backdrop, India is making significant moves within the BRICS bloc by integrating cryptocurrency into its international trade strategy. Following their first crude oil transaction with the UAE using local currencies, India is considering expanding the use of crypto, particularly the XRP ledger system, to further these efforts. Reserve Bank of India Governor Shaktikanta Das highlighted the importance of cross-border payment efficiency and the interoperability of central bank digital currencies, CBDCs. India's push toward crypto adoption within BRICS could have a lasting impact on the global financial system and further shift the focus away from the US dollar. Meanwhile, Ethereum co-founder Vitalik Buterin has come under the spotlight after transferring 800 ETH, worth approximately $2 million, to a multi-signature wallet. This sparked speculation that Buterin might be taking profits, especially after moving 3,000 ETH earlier in August. However, Buterin clarified that these transactions were meant to support various crypto projects and charities, not for personal gain. This move raised some concerns but also reaffirmed Buterin's ongoing commitment to developing the Ethereum ecosystem. As smaller traders struggled with market uncertainty, Bitcoin whales were quietly accumulating. The number of wallets holding at least 100 BTC hit a 17-month high, with 283 wallets crossing the threshold in the past month. In total, these large holders accumulated over 133,000 BTC, worth more than $7.6 billion in just 30 days. This whale activity signals confidence in Bitcoin's long-term potential, even as retail traders sell off due to short-term market pressures. While whales are buying, US Bitcoin ETFs are seeing outflows. This week, ETFs shed $277 million, with BlackRock's iShares Bitcoin Trust seeing rare net outflows after a strong start earlier in the week. These outflows reflect growing caution among institutional investors, who are reacting to the broader market downturn and the uncertain economic outlook. BlackRock's iBit fund, for example, ended the week with net inflows. But other funds, like ARK Invest's Bitcoin ETF, saw significant outflows, losing over $220 million. Japan is also making waves in the crypto space, announcing plans to cut its cryptocurrency tax rate from 55% to a flat 20%. This significant reform is expected to drive more investment into the Japanese crypto market, making it easier for individuals and institutions to participate without facing high tax burdens. The Financial Services Agency's push to treat crypto like other financial assets marks a major shift in how Japan approaches digital assets and could set a precedent for other countries to follow. In other global developments, the FBI has issued a warning that North Korea is actively targeting US-based crypto funds, especially Bitcoin ETFs, with hacking and theft attempts. This highlights the importance of security in the crypto space as geopolitical risks continue to rise. Investors are reminded to prioritize secure wallets and robust security practices to protect their assets from potential attacks. Meanwhile, MasterCard continues its push into crypto, partnering with Mercurio to launch a euro-denominated crypto debit card. This card will allow users to spend crypto directly from self-custodial wallets at over 100 million merchants worldwide. The partnership is a significant step toward mass adoption, bringing crypto even closer to everyday financial transactions. Russia too is leaning into crypto as a tool to bypass Western sanctions. According to Chainalysis, the Central Bank of Russia is developing a crypto infrastructure to facilitate cross-border payments. This new framework, combined with the legalization of crypto mining, is expected to enable Russian businesses to use digital currencies for international trade. As countries like Russia and India move toward crypto for global finance, the shift away from traditional financial systems continues to accelerate. In corporate news, Samsung made headlines by partnering with Sony to invest in Layer 2 blockchain development through Startel Labs. This investment signals that major tech companies are serious about blockchain's potential and are positioning themselves for a future where Web3 technologies play a central role. Switzerland's Zurich Cantonal Bank also made a big move by launching Bitcoin and Ethereum trading services. As the fourth largest bank in Switzerland, this decision opens the doors for more traditional investors to easily access digital assets alongside their traditional investments. It's yet another sign of how established financial institutions are embracing the future of crypto. But not everything is going smoothly in the world of crypto funds. Outflows continued across the US, with crypto funds losing a total of $305 million this week. Bitcoin alone saw outflows of $319 million, driven by stronger than expected US economic data, which lowered the likelihood of a near-term interest rate cut by the Federal Reserve. Interestingly, blockchain equities bucked the trend with $11 million in inflows, especially into Bitcoin mining-specific products. Shifting to the Middle East, Qatar is stepping up its game in the digital asset space with a new regulatory framework. The Qatar Financial Centers new digital asset regime includes legal recognition of tokenization, smart contracts, and digital property rights. This positions Qatar as a leading force in the region for crypto regulation, attracting businesses and investors looking for a secure and transparent market. Finally, in a surprising turn, Venezuelan President Nicolas Maduro announced plans to re-enter the world of crypto. Facing ongoing economic struggles, Venezuela sees cryptocurrency as a potential solution for stabilizing its economy, providing an alternative to the traditional financial systems that have failed the country. That's all for this week's Crypto News Roundup. From major institutional moves to governments exploring crypto for international trade, it's clear that digital assets are shaping the future of finance. As a crypto buyer, staying informed on these developments is key to navigating this ever-changing landscape. Don't forget to like, subscribe, and hit the bell icon to stay updated with all things crypto. Until next time, stay sharp and keep watching the market.